SOFI announced a $1.5 billion stock offering, and in the pre-market today, their stock price is down over 7.5%. Now, this of course has many investors worried, so let's talk about it. Firstly, what is a stock offering? Well, a stock offering is a bit like raising money, but it's an alternative to taking out loans. With a loan, let's say you borrow $1 million, you've got to pay the principal plus interest every single month from the first month. So you might borrow $1 million to build a factory that might take a couple of years to make, but during that period of construction, you still have to figure out a way of paying a certain amount every single month. Now, with a common stock offering, it's actually a little bit different. What happens is companies offer more stock and investors purchase those shares. So a company like SoFi can take out a loan that they basically don't have to pay back. So think of it this way. If you have a company, you can offer shares of a company to an investor. They give you that $1 million, but now they own a part of your company. However, you don't have to pay them back a certain amount every single month. In fact, they can simply hold on to those shares until a point in the future when they want to sell, and that might be several years or more away. So you don't have to worry about monthly repayments plus interest. And that's the key. It's actually a better way of raising money, or at least a more cost-effective way of raising money, especially when the value of your company or your stock price is already quite high. And that is exactly what SoFi are taking advantage of. So why the drop? Well, let's go into their announcement yesterday. They announced an underwritten public offering of $1.5 billion worth of shares of its common stock. Now, why? Well, what they want to do is enhance capital position, increase optionality, enable further efficiency of capital management, and fund incremental growth and business opportunities. So in other words, they want to give themselves a bigger financial buffer without using loans from another bank. But they also potentially want to fund the growth of their company and opportunities. So what do I think that means? Well, I personally believe that they're going to use at least some of this money to advertise their new SoFi crypto platform, which, in my opinion, will be a key future driver of revenue and earnings growth. I do believe that it could end up being a very profitable platform, but they need to invest in the marketing and also in the improvement of that platform over time. And I believe this is at least part of this money will be used for that purpose. So, why the drop? Well, let's take a look at their second announcement that followed on from this. They said that they are going to offer about 55 or 54.5 million new shares at a price of $27.50 per share. Now that's important because it shows you exactly how much dilution will go on and at what price they're offering these new shares. So let's take a look at their stock price right now. And what can you see down here? Well, if I zoom in, you can see this a bit better. Their stock price has fallen from almost $30 per share to just under $27.50 per share. Right now, we're seeing a slight overreaction, maybe because some investors are scared about what this could mean. But as you can see here, the stock price has basically fallen to match that share offering. Now, is there something that you should be worried about or not? Well, here's my take. So, when it comes to share offerings, you have to understand why and what it's being used for. Now, in this case, with SoFi, I am still confident in the abilities of the CEO and the executive team to carry out their mission. And I have not lost my confidence in that. Considering that over the past few years, they have been executing brilliantly on their strategy, I see no reason for that to change. And I actually think this is a very smart choice, especially if they see a need for this money. Now, you might be thinking, well, why don't they just use the money they have? And the answer to that is going to be cash flow. Maybe they've already got an idea of where they're going to be spending the money that they already have. Maybe they've set aside some of that money for loans. They've set aside some of that money to develop their new crypto platform. They've set aside some of that money for maybe a purchase of another company. Who knows? So I do believe that this will give them more headroom, and as they say in their own words, more optionality to execute on their strategy. And that is what I believe is going on. So personally, I do believe this is going to be bullish for SOFI in the long run. Now, when it comes to the actual stock price, what do I think is going on? Well, looking at it right now, we can see that, or at least my opinion, is that this stock is somewhat overvalued. Let's take a look at their future earnings projections. And what can you see here? Well, in 2027, their projected earnings are 83 cents per share. And in 2028, 92 cents per share. Now, this is going to come down by about 4% because of this new stock offering. So maybe it will be around 80 cents per share and 89 to 90 cents per share. But we can assume around a 15% growth. At the moment, however, if I take my calculator out, what is $27.50 divided by 83 cents? Well, that gives us a price to earnings ratio, don't know if you can see that, of 33, a PE ratio of 33, whereas they're expected to grow their earnings at around 10, 12, 15%. So in my opinion, I do believe that we're overvalued right now. However, I do believe that looking ahead into 2027, 2028, and even the 2030s, that SoFi's crypto platform could unlock more growth. So I actually believe that we will see an acceleration in SoFi's projected earnings sometime in 2026. And I believe at that point is when we will actually see a re-acceleration of the increase in SoFi's share price. Now, just to remind you what has happened this year, their stock has gone from the beginning of January of around $14 per share to where they are now, representing close to a 100% increase or doubling in their stock price within 1 year. Now, as far as stocks go, that is pretty good. But realistically, you cannot expect that to continue. So, what we're seeing now is the stock price fall down to reflect the price of this new stock offering. I do believe we might see an overreaction to it because some investors are going to get scared by this because of what it could mean. But I do believe that in the long run, if SoFi can execute and make money, make many profits from their crypto platform, I believe it will be a new driver for growth. And I do believe that eventually we will see $40 and even $50 per share. However, I do believe that is around 5 years or so away. So I do believe that right now the stock is somewhat overvalued, but my bullish thesis on SoFi still remains. I don't think this is anything to worry about. Stocks go up and down in the near term. There is a lot of fluctuation. And I believe it's more the traders who are getting scared out of this stock. However, there is also, of course, a short-term risk in that job losses are increasing and there is a risk of a recession in 2026. However, there might be a slowdown, but whether a recession actually happens or not is anyone's guess. So what we're seeing is a combination of two things. Firstly, the stock market is already a little bit scared going into 2026 because of an economic slowdown. And secondly, I do believe that we're just seeing an overreaction to SOFI's stock offering of $27.50 per share. So right now you can actually buy the stock at less than the offering price, which in my opinion represents good value, especially for a company whose earnings I believe are going to increase in the future and go beyond $1 per share and eventually beyond $1.20 per share and more, especially if their crypto platform really does take off.